Hello, and welcome to Smart Karma's corporate webinar. I'm your host, Arham Jain. Today, I have the pleasure of hosting UMP Healthcare's CFO, Mr. Patrick Chung, and Smart Karma Insight provider, Sameer Taneja. Thank you for being with us here today. We will start the webinar with Patrick walking us through with a company presentation, after which he will engage in a fireside chat with Sameer. We are taking live Q&A, so I would request all our attendees to post your questions in the Q&A tab at the bottom of your screen. During the webinar, we will also be sending through some links on how you can connect with UMP Healthcare and read more research by Sameer. So please do look out for the messages in the chat box. Now, without further ado, let's dive right into an introduction to UMP Healthcare. Patrick, over to you.
Thank you. Good afternoon, everyone. It's my pleasure to introduce you about UMP. Let's see the presentation first. Actually, we are a healthcare company, and our main business segment is mainly doing the corporate healthcare solution and the clinical service. You can see that from our corporate solution, we are working for many corporation insurance company to provide the healthcare scheme solution, and also we providing the network management and third-party administration for the healthcare services. And at the other side, we also have the clinical service, which cover the medical service, clinical medical service, dental service, and also our imaging and lab services. All these are providing mainly for the corporate clients and also for the individual. And the company is mainly founded by a group of doctors. They have the expertise and insight from the medical professionals 30 years ago. And then they look about what the needs of the corporation, and then they group together and provide the medical service, mainly for the hotel, the bank company, and then extend the services to the insurance company. And then they structure the healthcare solution so that it providing a solution, giving the win-win solution to the insurance company, patient, and the doctor. And then it developed for many, many years. And we go listing in 2015 in main board, Hong Kong main board listed. And the next page is page 4. It shows what our service network. We are mainly in the Hong Kong and Macau and have some footprint in the Shanghai and Beijing. And our cell phone locations for the medical, imaging, and dental service have over 50x service location, and we have a extensive medical networks which have over 1,300 medical providers serve for us. And then having this extensive medical network to serve for our clients and also for the individual patients. And our service cover the primary medical care, surgical, dermatologists, physio, dental, and also imaging and lab medical services. So we go to the figures, and page 6, it is the result highlight. Our financial year is at the year-end 30th of June. In late September, we announced our annual result for the financial year 2023 to 2024, and our revenues go up to 748 million versus last year is 727 million. It go for 3%, and our EBITDA, due to certain increase in operating expense like rental and manpower, we have dropping, and our overall profit attributable to shareholder it go to 40 million as compared to last year. We have 33% decrease, and our earning per share 5.08 cents, and our dividend for the whole year dividend we have 3.3 cents, and our cash on hand is 258 million, and our shareholder funds is maintaining at over 700 million it broke record at 725 million. Go for the next page. You can see the comparison of UMP ourselves and the other listed healthcare member listed company. That is Human Health, stock code is 1419, Easy Healthcare, stock code is 2138, and Tang Health 3886. Since they have different financial years, it's not easy to have similar periods to compare, but we having the year end to compare each other. At the left-hand side is our UMP, as I just say, what we have is 748 million revenue and profit, 48 millions. As compared to Human Health, they have same financial year and have announced their result. Their revenue is nearly 600 millions and the profit is only 24 millions. And Easy Health, Tang Health, even they have a big revenue base, but they record net profit loss. For Easy loss for 19 million Hong Kong dollar. For the Tang Health, it goes to nearly 200 million loss in last financial year, in this just announced financial years. And in the middle of this page, I'm showing the earnings per share, the PE, and the relevant market cap. You can show that UMP have about PE 10 times as compared to the Human Health, which is 16 times of a PE ratio, and market cap is quite close. UMP and the Human Health is about 400 millions. And we are quite similar for the PE ratio and the market cap. But for the Human Health, because it is mainly working for the medical clinical network, they have extensive their own medical network, but they are not like us. We having a strong patient base of from the corporate healthcare solution. So they are mainly doing the GP, SP, and some imaging services. Their services is mainly covered by the clinical medical services. For the Easy and Tang Health, Easy is at the beginning to work for the beauty service, and in the past few years during COVID, they start to extend the service to have more medical service. So extend their revenue base to over 4,200 million Hong Kong dollars. But they are not strong in the managing medical services, and they don't have the corporate healthcare solutions business units. For the Tang Health, it have a PRC hospital service and Hong Kong medical service. And but in the last financial year, they have some impairment of associate, and they got a record net profit loss and net loss in the last financial years. This is a big quick comparison for the similar healthcare groups in Hong Kong. Next page, the page 8 is showing UMP in the last 5 or 6 years, what the patient number and what the revenue growth in the past 5 to 6 years. In the middle, you can see that in the 2020 to 2022, it is the COVID periods. You can see that even the patient is dropping, but the revenue is still maintaining at a similar level. It go above 600 or near to 700 million Hong Kong dollar for the revenue. And even every year we have growing, and for these 2024, it go up to nearly before the COVID period. Besides, we see the revenue and the profit. We go to see how our expense structure. And for the healthcare structure, it's quite easy to understand because it's mainly the patient go to visits, and for us, we also have the revenue from the insurance company and the corporate. But for the expenses, mainly, as we understand, the main cost is the doctor fee. Because we are having the corporate healthcare solution, some of the revenue we share, we need to pay for the doctors. In this part, we work on the professional service expenses. For last financial year, it's record about 270 millions Hong Kong dollars. It really occupied, it ate about profit or revenue to 36%. Beside the doctors, we also have the nurse, frontline servicing people, and also the back-end corporate office, human resources, accounting, legal, also others, back-end hotline or TPA administrator. It is recording the employee benefit expenses. It go nearly 200 millions Hong Kong dollar. It occupy about 26% to the revenue. And as we have some investment in the imaging center, it's quite capital extensive. In the last year, we also have some investment for the new center. So we have depreciation and amortization, only 113 millions. It's occupy about 50% to the revenue. And also we have some inventory, some rental related expenses, and all in all together it's nearly rental expenses and cost of inventory, they are about 10% of the revenues. So it's quite simple for the expenses structure. And for our profitability, you can see that our EBITDA compared to the revenue, it is EBITDA margin is about 10% record, 11% in this 2024. And our net profit margin is 5%. And our return on the shareholder funds is go to about 6% in the 2024 financial years. In this financial year, just the next short sum of what our operation in this financial year. For the revenue, as you say, our corporate solution, it occupy about 1/3 of our overall 748 millions. It record 255 millions. It up to 3.9% growth year on year. And the operating profits record nearly 40 millions. It dropped 12% because the utilization of some of the healthcare plans, it makes some pressure to the margin, because we have two great stream of the healthcare solution. Some is case by case, and the other is a capitation plan. It means the corporation has fixed the yearly contract sum, and it will depends how many the staff or member to utilize the medical service. So for these kinds of healthcare solution, the margin will go up when there is lower utilization. So during the COVID, this kind of business contract, you have higher margin. And normally for this contract is normally have a higher margin. But as compared to last year, due to more and more people go up to use the insurance service, insurance healthcare product. So this kind of health capitation plan healthcare solution have increased its utilization. It means it's affecting the margin of this type of healthcare solution products. So it makes some pressure to the overall margin for the corporate healthcare solution. In this financial year, we also noticed that we have increased some of our contract customers, and our existing contract customers, which over 2,000 corporation, including insurance company and some new corporations. Later, I have a page to show you what our customer base is. And in these financial years, we also having a record to have 1.26 million scheme member. What this means is some of the healthcare insurance schemes, they have the memberships. We now serving over 1.26 million these healthcare members for using our corporate solution. It means they are using our corporate medical health networks or medical services. And the utilizations of these scheme plans showing that our corporate solution is well recognized by the corporation, and our service, our corporate solution is more tailor-made or more accepted by the customers. So for the clinical service, and the right-hand side, it is in blue color box. It record the 583 million revenue in this financial year. It also have a growing 3.6%. And amount of which it really have 132 million inter-segment sales. What it means it is some of these patients visit our clinical service. Some of them are serving the corporate customers, or they are taking the medical card and coming to our medical network using the GPSP medical service, dental service, or even the imaging and lab services. And one more thing is showing that for the specialty SP service, the revenue from the SP service is growing up in this financial year for over 20%. And as we mentioned last year, we have some imaging center, and they are ramping up, and more revenue bringing from these new center, and together with the existing one, we record increasing the overall income to 30% this financial years. And after deducting the depreciation, some of the operating expense, it record a 70 million operating profits. And the overall annual patient visits, it record 1.5 million. And one of the reasons for the drop of the profitability is due to the impact of the dropping of the visa healthcare examination cases during this financial year. So it's a quick highlight or sum up for what we are doing our business in these financial years. Our next, we're going to see our new development. In coming after June of 2024, we have opening some of the new medical center. We have consolidating some medical center, and beside the Shanghai and Beijing, we're also starting our medical center in Guangzhou, which is also doing the IMD, the visa body check examination medical services. And in our Causeway Bay, from our January 2024, we start the imaging. We also have the medical center there. And in this July 2024, we have also started our Chinese medicine center in Kowloon side, premiums, crowded convenience, our medical center in Jordan. This page showing what our customer base is, and you can see that most of the insurance company is our customers, and some of the big corporation like HSBC, some big names in the corporation like Cheung Kong, MTR, of course New World, and Sun Hung Kai Properties, and even some Macau casino company, also our corporate customer for some over 10 to 20 years. And as below part, you will see we are doing a lot of overseas visa body check schemes, body check service. We cover a few common country, so it's bring up a lot of revenue in our business. Coming out, we have some strategic update. Many people will ask what UMP corporate solution is, what we are doing. This picture showing what role we are doing. We are at the middle, working with many of the clinical network, even our own network, and then we are building some of the solution or some product. And for the corporation, they're providing the healthcare solution, healthcare plan to the employee, or for the insurance company, they're providing the healthcare product to the to their customers. So we are working as the administrator to manage the network provider. It means it is the doctors or even hospital, the imaging center. And we are at the one side, we having all these patient pool, bringing all these patient pool to the doctors. And at the other side, we are making it reasonable to control the medical claim. And this help for the cost saving for the insurance company, also for the bank corporation to control their employee healthcare expenditure. So this is what our logic, our business model on our contract business. And as in this year or in after the COVID, even Hong Kong government or the mainland China government all realize that the domestic healthcare can help to ease the public health pressure, because if they need more and more private medical sectors can help to have a key roles to take care of the medical service for the citizens. Just like they so more government, they are working more scheme or policy to make those healthcare managements starting in the different area, and all these regional area negotiating with like us, the private medical groups, to operate all these medical service. The government may give some tender or subsidies for these services, like the dental service, some of the healthcare service, some of the healthcare management services. All these, they understand that if they put it outside to the domestic or private group, they can make it more efficient or more cost effective. Because of this, it can have a more funding or support. It can have more opportunity, business opportunity for our healthcare group, because we are holding a quite extensive medical network. We can help government, such like to do some healthcare medical policy, some medical service doing the domestic areas. And because of government putting some of the like dental service, imaging service, they can put it to the private sector. They can ease the public health pressure. So it pushing some public patient source to the private sector. It makes us have a more patient pool. Besides, we also have the corporate patient pool. Now we have more public patient pools, so that we can generate more clinical medical revenue. And because of these patient pool can cause referral to different medical services. So all these can help to improve the overall revenue to the private sector. And because UMP having great experience to manage the healthcare solution, like the medical insurance medical solution. So we know how the logic, or we already have a easy use e-system for the healthcare card or medical policy system. So we have the competitive advantage to use to cope with the government policies. And of course, we are work with many because we have a quite large medical network, so we can have worked with many innovative med health or healthcare company to use the technology to ease some of the pain point of the medical developments. So all these we think that can help or have more incentive for the move of our revenue or corporations. So all these we think that can help to UMP can cooperate or to match with the government needs. I think even for these policies need to take times, but based on our strong experience to work with the corporation and have a good system to tackle for the healthcare solution, we are at a good position or leading position to take care of these government patient base. And we have more experience, better than some of these single doctors. We will be easy to bring some of the easy solution, cost-effective, profitable solution to take up all these healthcare tasks from the governments. So do we think that this government sector will help to have more contribution in the coming years for the UMP developments? So let's sum up some of the development of UMP. That's it. Thank you.
Thank you so much, Patrick, for that insightful presentation. Now, over to you, Sameer, to take us through the fireside chat.
Firstly, thanks, Patrick, for this really comprehensive presentation. Just a few comments from my side. You know, when an investor thinks of your company, he generally looks at, the first things he look at are, you know, you're a 360 million Hong Kong dollar market cap company. You have 260 million Hong Kong dollars of net cash, which gives you an EV of about 100 million Hong Kong dollars. And then if we look at your core profitability, it was around 30 million Hong Kong dollars last year. So you're about 3 times P, and you, I guess, pay about 60% of that. So, like, you know, you're sort of a 6-7% dividend yield company. So with a mid to high single digit revenue growth. So, you know, my questions are all going to be kind of centered around this. Okay. So the first question is around the revenue growth and the drivers for it. So I guess we've all seen that last year, and in that slide that you showed us on your competition as well, things have been bad in Hong Kong. So EC, Town Health, Human Health have all had very suboptimal years in terms of their results. So maybe if you could give us a flavor as to how demand in Hong Kong has been recently, and also, you know, what are the drivers you think going forward of the government? You know, you've mentioned that there's this program of the government now on their strategic vision for 2022 to 27. Like, how do you think that's aligning with your revenue right now as we speak? You know, is there any contribution coming from there?
Yeah. Thank you, Sameer.
Yeah.
From the past few years, you will see that because we are healthcare industry, Normally, we are not the drugs development company. We were a big jump for when the new drugs launch out. Because we are healthcare, we are mainly to do the corporate service, healthcare service, and we are doing some clinical medical service. We have on and on have some growing in the medical service and the margins you see in the past few years. So, but we think that overall for the Hong Kong healthcare industry, what we see after the COVID, we are aware that more and more people we are aware for their healthcare, and because of the age populations, the healthcare awareness is increasing. So what it means beside the queuing a medical service, when you got illness, you will find a doctor. Besides that, more and more people will have their body check, will have the vaccine taking, they will have overall healthcare checking. So these will, besides the illness, more and more people will using the healthcare solution to have the regular checking. So I will see that such kind of service will increase. That's why we have immense the imaging and lab service in the past in last few years, because the imaging lab is the key function. Even you got some SP service, or when you have some special disease like heart disease or unfortunately cancer, so you need to have quite large usage for the imaging labs. So we will think that the demand for these auxiliaries, imaging lab or SP service or even surgical service will be increasing. And also the healthcare management, people will more to participate in body check and healthcare management. So we think all the service demand will increasing. So and also we also providing more new package to our corporate kind or insurance kinds to have more these elements in the healthcare product. Just like for the insurance company, we will have some healthcare plan for them or executive plan so that they have the follow-up for these areas, because when they have more healthcare management, it means it can lower their medical claim or medical expenditure to the insurance company. So they are welcome for our new idea for this concept. So I think that and also because of the age populations, we think that the demand for the imaging lab will still increasing. And of course, due to the overall business environment is still not recover before and have some uncertainty. But we think that more and more people may not easy to taking cash from the pocket for the illness, but they were more willing to use the medical card. So it can help us to capture all these patient, and then we will have more efficient to cost referral for these patient pool, so they can stimulate different sectors medical service. So overall, we think that the revenue will still have the momentum to grow. And as you mentioned in our annual result, in past half year, we have aware some pressure in the overall environment. We have started to have cost control, and we visit our operation efficiency. We have consolidated some of the medical center, and we will strengthen some of the manpower so they make the operation more efficient and make the course using a more efficient way. In our just July and August internal management report, we found that all these controlling or efficiency measures have a very positive result to our overall profitability. Our gross margin have over 5% improvement, and the staff costs have dropping to nearly 10%. And the rental, because we consolidated some of our medical center and some area using more efficiently, it makes it, and the one side improves the operating surface efficiency, the other side is it helped to save the rental charges. All these showing us it is supporting for the profitability. So we are positive to our coming financial result for 24 and 25.
Understood. Okay. I mean, actually, that was going to be the segue to my next question. But I guess the thing is, what I can understand from what you're saying is that a trajectory of mid to high single-digit type revenue growth is something that we can expect going forward. And when we talk about your profitability in FY24, which was around the core profitability was around the 30 million. I guess you had that one-off of 18 million, and then if we net the impairment, you're somewhere in the 30s. Now, if we look at margin improvements from here on out, what sort of not asking for granular number, but like what sort of improvements can we see going forward, and also where are the areas besides, I guess, consolidation of rental areas, etc., where you'd see your costs kind of come down? And and we go back to your history, you've had even a year where you had 70 over million of profit. So so where can we expect you to kind of settle?
For the revenue, we are confident they still have the growing. Even in our interim period, I expect that it will still maintaining a growing momentum, because as we say, the medical demand is still increasing, and some of our corporate solutions products, we having chance to increase the price, the unit price, because we having some new elements to the product. And due to the more positive acceptance or positive response from the customer, we have more and bargaining power for us to lift our unit price to the corporation and the insurance companies. So for the corporate healthcare solution, we are assuming it will improve the overall revenue sum and the profitabilities. For the clinical, as I say, because the imaging center is the key elements in the healthcare patient journey. So we also looking at some of the centers is ramping in a better space as we are expected. So we also think that the overall clinical medical sector, we also have a good result in growing the revenue. So overall, the margin for both corporate and the medical service, we expect it still improving maybe 5% or 5 to 10%, I guess. And the other side about the corporate overhead, like the main two is the people and the rental. What we say it is our control measure have really a really good positive result. It's really improved the operating efficiency. So the bottom line, I guess, we will have a very good signal for our overall profit, our profitability, and over the bottom line is profit before tax or net profit. We are confident that and we can go into the direction or like the last year, or we look forward and expected it may be going quite close to the last 1 or 2 years profits. We're working on that, and the just July and August, or even this September, we all seeing it is good sign that we will going in the good way, a wide race, to meet this target.
Right. Understood. And just to give perspective, last year profitability, that's FY23, which we're talking about. You're talking about that as the benchmark, right? Where you had around 55, 56 million of profit, right? In that particular year. Understood. Okay.
Yeah.
So in terms of growth, still sticking on growth, so there's the organic growth which you will derive from your medical.
Besides organic growth, we are still looking for some target that can be supplement to our existing business. We are seeing some business in the GBAs that we have some starting for developing more IME or more medical service, and even we are bringing our strong corporate healthcare solution to the mainland China. We expected what our extensive experience in the TPA service or corporate healthcare solution service, our experience can help for the development of commercial insurance in the mainland China. Of course, we know that I need some time to have a more concrete jump for the revenue profitability. But I think in the mainland China, we also noticed that even they had good coverage in the public healthcare by the government, but more and more demand is growing for the commercial insurance coverage. More and more people are willing to pay money to have a better commercial healthcare insurance package. So it means that some of the big customers, some higher income people, they also want to pay to have a better healthcare coverage. So what it means that they will have a big potential for these people that buying or request for a better medical service. And we have already negotiated with some of the leading TPA corporation in mainland China. We also have negotiating, working for some cooperation, some for the cross-border. Some people will come to Hong Kong to use Hong Kong medical service, or some people when they're working or going to the mainland China, how they using the medical healthcare plan to extend to the GBA service or even to the overall mainland China. So we have backing some of these plan or some of these cases in no sound, and then when they extend to more the volume increasing, I think it will having a quite large growth in the dollar amounts as in the overall revenues. And for the M&As, we are exploring some of the things, I think, to strengthen our SP service, because we found that in the clinical medical service, beside the imaging and lab, it is a key element. The SP service, like the cardiologists, and it is quite more common illness for the middle age or elderly. So the demand for the cardiologist SP is increasing. So we are considering or looking for some of the opportunity to strengthen or even to cooperate with some of the SP group so that it can increase our overall revenue and the profitability. All this is saying to looking for the right candidate or right target company. We think that these SP extensions can help to increase the overall revenue and the profit, the margin, and also strengthen our corporate healthcare solutions business. So we expect that it can have a quite sustainable synergy or sustainable engine for the growth for the medical healthcare services. And in the last 1 or 2 years, when we are working with some private hospital and surgeon pathology groups, we still have strengthened our cooperation, and we think that it is quite good for the cross referral and some of the working model. We think that when the government tender, they are putting more citizens to the private sector, or our existing strategic alliance and more help for the patient to drive the patients in this patient ecologies and within our strategic alliance, and still bringing more profitable to the UMP.
Okay. On the acquisition landscape,
Yeah.
how, I mean, I guess you're looking at targets in the SP specialized area. So how have, can you give us a sense of how like pricing has been, like, how has it sort of come off a lot in Hong Kong? Are there very good opportunities that you're seeing? Are there many in quantum? Yeah, just a sense of that compared to what it was, let's say, a year ago, because I guess the market's really gone down. So it's interesting if you have like a lot of opportunities on your plate.
It may be a right time for the M&A because, as you say, due to the markets and was a bit uncertain, it's more easy to negotiate for a better price for the M&As. So we're still looking for and exploring what area, what the doctor or what the medical group or what the service, even for the healthcare product, because as we mentioned, coming the healthcare management is also a very potential business unit for the healthcare management. So the supplement business is also another, even it is competitive, but when you find a good names or a well-established market shares supplements business, we also think that it will have great help for the overall healthcare management or healthcare business. So yes, we are looking for the difference because our medical service is quite extensive and a wide spectrum. So any of it is now in a reasonable price, and all these can have synergy to our existing business.
Got it.
Yes.
Okay. So again, coming back to your cash, you have 250 million net cash, right? That's a lot, right? So you can think a lot about M&A and other things. But if we were to look at your capital allocation and how you think about it, so there are 4 parts to it. There's one, the dividends which you give. So you've demonstrated that you generally pay out about 65 to 70% of the earnings in the past. So that's just from the profits that you have. So your cash pile is still growing. The second would be buybacks, which I guess the management already owns so much. So I'm wondering what your take is on that. The third we've talked about, which is M&A, and the fourth, which we've also talked about, which is reinvesting or investing in the business, right? So how do you think about the cash and these 4 pillars of capital allocation? Like how would you sort of apportion what you're going to do with your cash, what you're going to do with your profits on all these pillars?
Yes, do you see that in the past past few years, we still maintain a quite strong cash positions. And this also brings the strong message that we are having a strong cash flow, operating cash flow. So it's bringing a good position for us if we having a good target so that we can have more resources for working or even to buy any attractive target company. And on the other hand, we also in the past many years, we still have a quite attractive dividends to work for our existing shareholders. So I think the dividend policy is quite consistent or quite similar in the past few years. We also bring a in line with our profits. We also have quite high dividend payout and having a reasonable dividend yield. All these, I think they will be still consistent. Another decision point is some may ask whether we're going to the market to buy, we purchase the shares so that it can have more reflecting to support the share price. But because we are quite weak in the liquidity, the share is now quite concentrated. Some of the main shareholders, some managements. So we're considering even we go to buy, even it is a reasonable price for the repurchase. But what we will purchase will quite close to the public flow area, and because of the weak liquidity, even we purchase, it make the liquidity if have more pressure because more it will weaken the liquidity as a whole.
Understood.
So we and sometimes the board, the management also considering whether it can live up so that the value of shares increase dramatically. But of course, we'll some considering whether we have such a more shares in the market so that you can buy back. And also after we buy back, it means the market liquidity will be more weaker. So we're considering all this. But of course, we also consider whether we have or we should having some other strategic shareholder. We may consider whether to invite other new shareholder. They can help us for another stage of developments. We have discussing on these topics. Once we got a good partner, I think we may not be hesitant whether we do some placing or some joining or some anyway so that we can strengthen our shareholder structure. Or of course, we hope these new shareholder or new partner can help to have others synergetic effect to the overall business model. So with the management is still taking how to strengthen the capital structure, whether we can have a better good shareholder, strategic partner, they can join us to strengthen our shareholder base, or at the other end can help to bring some more business or new idea, new business synergy to the overall business. So this is what we are going and looking for.
Great, sounds good. In the interest of time, maybe last question from my side. Just your expansion into China, is that like how are you going with that? And that's about it. Is there any further plans to execute more in China and grow the IME business there?
Yes. For the China developments, I think some people when they follow UMP when we are going IPO at the beginning. After IPO, we have been developing the gold training, doctor training for a few years. And at that time, the mainland China's healthcare environments, private sector is not easy and challenging because most of the people they go to the public healthcare networks. So it's not easy to doing the private sector medical service. But after the COVID, we noticed that more and more people know that the quality of the private sectors is is um, is good and also and high quality. So more and more people, as I say, more people they will just like say find some healthcare product to giving as a present or gift to the parents or to their couples. They also want to have a better healthcare coverage to the family. So we know that this demand is increasing.
Right.
So I think what we're doing is we have a strong experience in the corporate healthcare solution or the we know more about the commercial insurance game through. So we think that we going to the mainland China on the one side we developing some medical network and the other side we just like our experience in Hong Kong, we are negotiating or working, communicate with some of the private network or even a hospital. We also want to enter in some now building some medical network, and then we also are working with some of the TPA company or cooperate with them or building our own TPA concept to the mainland China. We think that in the medium terms or medium few years, we think that this commercial concept or this model will go and more popular in the mainland China.
All right. Sounds good. No, that's all from my side and our side, and yeah, we'll pass it back to Aram. Right. Thanks, Patrick, again. Yeah.
Thank you so much,
Thank
Samir,
you.
for some very interesting questions. And thank you so much, Patrick, for these detailed insights into UMP's product suite and strategy, and also the future development plans. I would also like to thank all our attendees who joined this session live. And for those who still have any queries left unanswered, please feel free to post them on the webinar's inside or contact UMP Healthcare via the IR button on Smart Karma. With that, I would like to wrap up today's corporate webinar. Thanks again, everyone, for attending, and have a great week ahead. Thanks, Patrick. Thanks, Samir.
Thanks, Patrick. Yeah.
Thank you. Thank you.